everything that we do in this world revolves around energy and primarily oil and gas. And even gas has gone up a little bit, even though natural gas has always been super low. And if you take that again in there, right now is a great time to buy and hold, but not for a quick turnover. But I do think that you're going to see some nice returns coming in for technology next week when they all start reporting. You'll see a quick fix in there at the end of the month or beginning of November.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we're just about at the end of October. No crash yet, but there's still, how many more trading days are there? There's 2 more trading days after today. So you never know. October 29th, 1929 was a date that'll live in infamy. Hey, it always pays to be a contrarian. Sometimes not in the short run, but in the long run, always. We've got the king of contrarian investing with us now. His name is Elliot Kallen. Maybe not the king of it, but certainly a master of contrarian investing. Between both of his entities, he's managing close to $1 billion. Elliot, great to have you on the show. Pre-call, we were talking, we came from the same area in Essex County, New Jersey. So we got a lot in common here, close in age. Hey, is the market going to crash at this point, or is this the time to be rushing in? You know, where wise men fear to go, fools, where wise men fear to go, fear to travel, fools rush in, right?
Well, Kerry, thanks for having me on. I appreciate that. Since we're talking about New Jersey, now that I missed the New York cheesecake, so you're making me hungry as we're talking here.
I missed a deli. We have it here in Florida, just not quite as good. And
no, and California has none of it. So I get it.
Yeah, California.
Here's where I think we are. You're asking me for my market be a prognosticator here, and I do a little bit. We do a lot of research. I just came back from a 3.5-day conference in Philadelphia with the Schwab organization, which we do our custodial work with. I think we're on a little pause of interest rates. Here's the good news for investors right now is the markets have been beaten up. If nobody expected this year that AI companies, the Microsofts of the world, would zoom the first half of the year, but everybody thought that the low-tech, high-dividend-paying companies that was the place to be. So what did all of us experts do? We sold out of tech early on this year. We bought into everything that pays dividends. What did the market actually do? Dividend-paying stocks junked out. They were terrible. And AI went crazy with a 23 to 27% gain. Wow, totally different. Mm-hmm. What's happened in the last 90 days is basically all the AI stocks, for the most part, not specifically, but for the most part, gave all the money back. And they did. The S&P now went down below where it started the year, and it was up into double digits for a while. And then what's starting to come back? The broader market a little bit with dividend paying. So all the experts have been wrong. All us guys with economics degrees have been really wrong on what we're doing. But with $80 a barrel oil, right, it is impossible for the Federal Reserve to drop interest rates. It's impossible because plastics, metals, everything that we do in this world revolves around energy and primarily oil and gas. And even gas has gone up a little bit, even though natural gas has always been super low. And if you take that again in there, right now is a great time to buy and hold, but not for a quick turnover. But I do think that you're going to see some nice returns coming in for technology next week when they all start reporting. You'll see a quick fix in there at the end of the month or beginning of November, and that should hold us through the end of the year. So I'm a buyer today, but I'm a cautious buyer with a very diversified, spread out portfolio, not just trying to pick sectors and winners, but trying to spread the news out.
All right. So did you see, since you're a contrarian and presumably you weren't buying dividend stocks when everyone else was rushing in there, did you see any of this coming?
It's hard. I saw the technology coming, but everybody did, but nobody believed it was going to last for 6 months. Everybody thought, well, we have a 1 week, a 2 week, a 1 month gain. What I did is I cautiously bought in So while the S&P basically is beneath water today, and the S&P and the Nasdaq is for them almost beneath water, we're up 8%. So we've really outpaced it by 800 basis points over most of our indexes.
So sometimes you win by not losing, and other times you lose by not winning, right?
That's correct. Then you also can't bet on mergers and acquisitions. That's a sector that is due for a big rally, but not today. Probably next year. That's the place you want to be. Take advantage of misprinting, and there's a way to do that. And we could talk separately on how you take advantage of mergers in the mergers and acquisition market, which is a good thing. I know we talked about this. You like mining stocks. I
didn't say I like them, but I am invested in them to some extent. Yes.
Yeah, and gold generally does well. I think you now have more world volatility. Don't forget, and more world volatility is generally good for mining stocks on the lag. They haven't performed as well, but they're good on the lag. So you're actually probably saying something for the next 6 months. Well, the world is more volatile. If it doesn't get more volatile than it is, mining should be a very good place to be.
Okay, so you don't think the world's coming to an end? What about the ceaseless wars, the Middle East, Ukraine, Russia, and the market just shrugs it off here, Elliot, right?
So the biggest problem we have is if the war spreads. So Ukraine and Russia have been doing this for over a year, and it did not really affect the markets. As a matter of fact, what it's going to do, it's going to dramatically help out the U.S. defense industry because we've got to catch up on all the armaments. That's a great place to play right now. And they're high dividend bank stocks, but that's a great place to play. The other place to play is to lessen your portfolio if China decides to become more aggressive, because we have 2 carrier battalions, carrier fleets over in the Middle East. We're a little more vulnerable. That would be a smart play for China, but they don't want to create war either, I don't think. But I don't trust anything coming out of China. But again, the defense industry, one U.S. industry, that will be the biggest winner from all this volatility.
And they've already been big winners before, right? Anything.
Yeah, I mean, you're looking at Raytheon, McDonnell Douglas. GE had one of the biggest quarters in their history, and they have stunk for 10 straight years. They've been doing great. You're just going to see more and more of defense-related contractors have record profits, probably for the next 24 to 36 months.
Okay, so let's just go shoot back to interest rates for a minute, Elliot. So the 2 years bumping up, and the Fed can't allow the 2-year to get ahead of the Fed funds rate, right? The yield curve no longer inverted as it was for the past 14 months, I think. Do you think we're in a recession right now, or are we heading for one?
No, I don't think we're in a recession. I've heard now for the last 2 years, fourth quarter of 22, there's going to be a recession. It didn't happen. Fourth quarter of 23, there's going to be a recession. Now you have some experts talking about the fourth quarter of 24. Sooner or later, they're going to get it right. You just keep saying that. You're going to have a flat tire sometime on the road if you keep saying I'm going to get a flat tire. But I think you're already going to slow down today there. I'm sorry, Kerry, we're going to have a slow down today. A traditional slowdown, I think we're kind of in a little bit of a malaise. You don't like your hair, but you don't do anything about it. That's kind of the malaise we're all in. So we're going to look at 1.5%, maybe 2% growth for the next 2 years. We do have an election coming. We're not going to have 4 and 5%. That's not in our world today. It's just not. We have to have some changes at the leadership level to rebuild the U.S. energy again, and then you'll see oil come down. But as long as we are depending ourselves on foreign oil, you're going to see high oil rates, which is going to be a slowdown in the economy.
Interesting you raise oil. Okay. Back in the 70s, when we had the dual Middle East oil embargoes, that really put the hurt on the U.S. economy, led to recessions both times. Arguably, the first one never really ended, and the second one started, I think it was 72 and 75 when we had those embargoes. Memory serves me correct. I might be off a little bit on the second.
Right. It was once under the Nixon campaign because he gave permission to the Shah to form OPEC, and they immediately did an embargo. And then once during the Ford campaign, following when he rescued the U.S. ship in North Korea.
Right. Okay. So, but what happened since then? Yes, oil consumption has continued to go up. However, natural gas has become much more essential, much more important, and in many ways has eclipsed oil other than in the transportation sector. Nat gas, way more important. The discount of nat gas per BTU to the price of oil, is pretty substantial, and it's stayed very high over the years. So nat gas is low. What does that mean? Yes, people might drive less, but cars are more efficient. I'm just not sure that the oil impact from $80, $100 a barrel oil is as great as it once was.
So the world uses, or the U.S. uses, let's call it the developed world. The developed world uses 40 million barrels of oil a day. It's a staggering number. Now, we add electric cars, we add gas, which are absolutely correct. We're burning more clean gas than we've ever burnt in the United States, particularly. Less coal. China's burning more of it on all ends, but we're not. India's burning more of it. Africa's burning more of it. The prediction is that in 25 years from now, with all the electrical changes that are going to be happening in your car, and maybe hydrogen also, who knows, we're still going to be using 36 to 40 million barrels a day.
Yeah, I knew that.
Steady.
It's not going to change, okay? But the percentage of energy, nat gas is definitely higher in Europe. With the Ukraine-Russia war last year, it was a near disaster. It was only, nonstop LNG ships leaving the U.S. that really saved their bacon last winter. So in many ways, nat gas more important than oil. I'm not downplaying the importance of it. I'm just saying it's not exactly the same situation as it was back in the oil embargo days.
No, and don't forget the energy that's being powered. And you make a really good point there, Kerry. The energy that's powering the U.S. economy is really much more, you're right, is much more natural gas. You're 100% right on that. I'm in California. You couldn't build an oil refinery if you wanted to. You could not build an oil power plant if you wanted to. It's going to be natural gas and some solar. And a lot of the country is going that way. Coal is basically dead. A dead product in the U.S., not dead
for export only. It's only for export. It's like Heineken, the beer that we get here in the United States from Heineken, they call it export, and it's nowhere near as good as the beer that they keep in Holland.
Well, I think that you make a good point on natural gas. I think from an investment standpoint, natural gas is a lousy investment and has been for a very, very long time.
For now.
Yeah. So I am not an investor in natural gas, but I have played the oil markets over the last few years.
Yeah. Yeah. I mean, hey, I'm not downplaying the importance of oil by any stretch. I'm just saying it's not what it used to be. Plus, vehicles get much better mileage, but I totally agree. Consumption has continued to go up, although it peaked at the gasoline consumption peaked at the great financial collapse, and it's never gone over that, at least the last time I looked at the chart.
Yeah. Now, we do have, Kerry, to be fair, we do have a really big set of headwinds in front of us that could spell recession, and that's real estate.
Oh, so, commercial especially, right?
It's going to start with commercial, and then we'll see where the contagion continues from there. But, in the office space across the U.S., there's about a 40% vacancy rate. In California, our building, I'm about 40% empty. It's a large building. The owner of these buildings now had 8 buildings like ours. He's now sold 6 of them off at less than he bought them for.
Yeah.
That's happening.
Upside down. Everything is upside down there, right?
New York is going to be like that. Florida might not be as much because you're really much more a strip mall state rather than big office park state. But most of the country still works on office parks. There's going to be a gigantic, come to Jesus situation in the second or third quarter of 2024 when a third of these buildings have to be refinanced and they're not worth that much anymore. And that could spill over into the personal housing market. And it wouldn't be so bad to have a housing correction happen where houses go down in the U.S. because that would open up the opportunity for more buyers, which is not there today. So that bad news could spell good news for demand, even though it wreaks havoc on supply.
Yeah. Yeah. There's like you said, a lot of potential economic headwinds. And, but going back to what you said initially, the economists, you remember that old saying, economists, they have successfully called 5 out of the last 2 recessions.
Well, that there are a lot of jokes about economists. You put 20 in a room, ask them what time it is, and you only get the approximate time because no one can tell the actual time. I get about 150 economic reports daily. It's impossible to go through all of them, and then I talk with them, I meet with them, and I do everything all the time. And my afternoon can be the exact opposite of my morning, depending on point of view. So some of this isn't going to too.
Yeah. No, hey, I couldn't agree with you more. But, the one thing that most economists never look at is the actual flow of funds that is coming from the rest of the world because of the uncertainty. When you're parking money in a bank overnight, you're not going to park it in Deutsche Bank for the weekend, right? You're going to park it at JP Morgan or Wells or one of them, even though our banking sector is certainly ailing, or you're going to be parking it in treasuries. You're not going to be parking it in Chinese government debt or Chinese real estate debt, right?
For sure. And at 5-point-something% in the U.S. short-term treasuries, that's a really attractive number.
All right. So when we have this conversation come next October, where do you think we're going to be at, Elliot?
I think we are going to be higher and better off today because we'll be a month out of the election next October. And so
that's right. There's an election. Well, I consider myself trans. I am trans-political. I've moved beyond it. I don't even think about politics anymore because everything always comes down to economics. Elliot, you have a podcast, you have a website. How do we find you?
Great. So the best place to reach me, the website is prosperityfinancialgroup.com or Elliot, ELLIOT, at prosperityfinancialgroup.com. And there's a website, there's a phone number on the website. I take phone calls. It's a lot of fun. Love to talk to anybody at any time.
All right. Hey, appreciate you coming on. If you've got a question for Elliot, shoot me an email, kl@kerrylutz.com. Show notes to this interview on financialsurvivalnetwork.com. You will find Elliot's site. Just click through to it. And hey, questions, comments, whatever, criticism. We don't really accept criticism lightly, but we always accept it. It's kl@kerrylutz.com. Elliot, been an absolute pleasure. We'll have you on again soon. Thanks so much for stopping by.
Thank you so much, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.